Okay, so what I'm gonna do, guys, I'm gonna clean up the lens. I'm gonna get started. All right, what's up, everyone? Happy Monday. So a lot of topics to talk about today, but before we get started, I want to remind you guys about our meetup coming up this weekend. Okay, so we are hosting a free meetup in California. This is your opportunity to meet and network with other traders all around the world. You get to meet me, you get to meet Bao, you get to meet our MIC team. It's going to be in a wide open park, so there's going to be no COVID restrictions. All you have to do is register at myinvestingclub.com/meetup. So go to myinvestingclub.com/meetup. It's going to have the location, it's going to have the hotel info, it's going to have navigation, parking, everything. So don't ask me the day of where the meetup is. Don't ask me where you could stay, this, that. It's been on myinvestingclub.com/meetup for months now. So the meetup is this Saturday, 11 to 3 p.m. Whether you're in California or maybe around, I'm flying from New Jersey all the way to California for the meetup, guys. This is your opportunity. So that's that. Number two is let's talk about the market crash and everything. So if you guys have not been living under a rock, crypto has crashed 50%. The indexes have crashed about 15 to 20%. And overall stocks have been crashing 50 to 60%. So what the hell is going on, right? What is going on? And there's a couple things that factor into this, right? So keep in mind, guys, I am not an economist. I did not go to school for economy, this, that. I'm just basically looking at what I see happening, right? So the number one thing is the Federal Reserve, right? So as you guys know, when we went into the pandemic in 2020, the Federal Reserve's solution to fix everything was to print money. And what ends up happening is when you print more money and put more money into the money supply, there's inflation. That's why car prices are up 20%. That's why gas prices are up. That's why watch prices are up. That's why everything is shooting through the moon because of inflation. There's more money supply into the market. So what ends up happening is when there's more money supply, everything goes up, right? Everything, even stocks go up. Now the problem is to combat inflation, right? To combat inflation, the Federal Reserve has been saying that they're going to raise interest rates. So again, to keep this very, very simple, bare bones, right now borrowing money has been free, okay? So whether you're trying to buy a home or a mortgage, the interest rate is extremely low, very close to zero. If you're trying to get a car loan, interest rate is very low, close to zero. If you're trying to get any loan at all, it's pretty much free, right? So the government is giving you free money to use and abuse however way you want it. And what has happened is that's gotten out of control, okay? It's gotten out of control because everything has gone up due to inflation. So the Federal Reserve, the people that control the money, the people that are handling, buying the equities, buying this, that to stimulate, to do liquidity, to do all this shit, they're waking up and they're saying, you know what? Inflation's a big issue. And because inflation's a big issue, we have to raise interest rates. If the Federal Reserve follows through with what they are saying and raises interest rates, people are not going to be paying 5-10% for a mortgage. People are not going to be going out and spending money on this stuff. So the housing market will crash. All of these tech companies that need low interest rates to make a big profit, all of a sudden, if the interest rates go up, their profit goes down, fucking market goes down, stocks go down. So raising the interest rates will help battle inflation, but it will fuck up everything else. So what you're seeing now in the markets, in crypto, everywhere, is people preparing for the Fed to raise interest rates, and they're hedging. They're selling, they're shorting, they're protecting themselves in case the Fed does follow through. In my opinion, guys, again, this is not stock advice. This is not anything more than my opinion, is the market is reacting and pricing in the Federal Reserve raising rates, right? So this is going to reward people that have cash on hand that can buy things cheap. This is going to reward people that have been waiting out. In my opinion, guys, I have no idea what the Federal Reserve is going to do. I got no idea. As you can see, they hinted that they're going to be raising interest rates and the markets crashed. What happens if they actually follow through with it? Are we going to crash more? Are we going to crash for a couple of years? Who knows, right? But just based on observation, this is all based on interest rates. If money is free, low interest rate, 1%, right? People are going to go out and fucking spend it. They're going to go buy houses they can't afford. They're going to go buy cars they can't afford because America is built on debt. America is built on borrowed money, okay? So once that borrowed money stops happening, once the Federal Reserve, the people that are pumping the markets, stop pumping the markets, the inverse is going to happen, guys. So you have to be prepared. Again, I think the Federal Reserve has a meeting on Tuesday or Wednesday to decide what the hell they're going to do or what the deal is. So I'm sure a lot of people are hedging into that meeting, are protecting themselves into that meeting. But the truth of the matter is that, yes, inflation is out of control. Yes, there needs to be something that has to be done to fix it. And this is what's been happening, right? So you could only print money for so long. You could only pump the money for so long. You could only do that for so long. And then on top of it, guys, on top of it, do you guys know what margin and leverage is, right? Do you guys know what margin and leverage is? So just to keep it very simple, margin and leverage is borrowing money you don't have. So imagine the government is giving you all this money, and then on top of it, you're borrowing even more money. So for example, a lot of these, I'll start with crypto. A lot of crypto brokerages, crypto funds, crypto exchanges, sometimes they'll give you fucking 4 to 10 times leverage, okay? So a lot of crypto, a lot of the buyers in crypto are using abnormal amounts of leverage. They're using so much leverage that it's pretty much ridiculous, guys. So for example, if you're using 10 times leverage, if crypto goes down 10%, bro, your account is liquidated. All it has to do is go down 10%, your account is liquidated. That's the fucking problem. So what's been happening in the crypto markets is all of the over-leveraged people that have been using borrowed money, money that's not theirs to buy crypto, have been getting liquidated against their own will because of margin calls. Okay? If I have $1,000 and the crypto exchange is giving me 10 times leverage, that means I have $10,000, okay, to use to trade with. If my crypto asset goes down 10% on that $10,000 that I invested, all of a sudden I'm down 100% of my money. And that's what's been happening, forced liquidations. So now take that on an even bigger scale, which is the stock market, okay? Stocks like Tesla, stocks like, I don't know, LCID, stocks like maybe even fucking Apple, Amazon, whatever it may be, guys. On top of that, all that stuff is on borrowed money. So instead of crypto being 10 times borrowed money, the market is maybe 4 times borrowed money, right? So if the shit goes down 25%, essentially you're going down to fucking zero, right? So this is just a lesson, guys, and this is just a reminder to be very careful with leverage and be very careful with borrowed money. If investing for the longer term, do not use leverage. Only use fucking cash, because the only way you'll lose is if a stock goes fucking bankrupt, right? Whereas if you're even using 2 times leverage, if a stock goes down 50%, you're fucking dead. Everything during COVID went down 50% and then rebounded 200%. So you would have been destroyed if you were using leverage, right? So that's the problem in these markets, right? It's almost a domino cascading effect, right? Of leverage and borrowed money being liquidated against their will. That's why you see these articles, $1 trillion or $1 billion was liquidated from Coinbase accounts. Yeah, $1 billion disappeared because people were using fucking $10 billion of borrowed money to fucking trade with, right? And that's why you're seeing these domino cascade effects where there's only sellers and no buyers because everyone's accounts are getting liquidated, right? Same thing in the overall markets, guys. So in the overall markets, you have your sugar daddy, the Fed, not buying stocks anymore. Your stocks are tanking because you're on fucking leverage. And then on top of that, interest rates are going to go up and these companies aren't going to make money. You saw what happened with Netflix. Netflix is down fucking 60% from the highs. From the highs, 700 and it's at like 350 today, right? So you have to be very careful in these markets, guys. So the reason why the market is correcting is interest rates, it's borrowed money, it's all this stuff. And you have to keep in mind that everything can change or everything can get worse when the Fed meets this week. Maybe this was the Fed's plan all along to show people what would happen if they raised interest rates. Maybe this is the Fed's way of coming in and saving everyone with some more stimulus package. The way I know the world works is it works on fear, guys. The more fearful people are, the more power the people in charge get because they use that fear to manipulate the people, right? So for example, during COVID, when everyone was bugging out and the markets were tanking 50%, the Fed's solution was to make trillions of dollars appear to pump up the markets. By doing that, the American people got $1,500 each, and Jeff Bezos and Elon Musk, because the stock price went up, they made $200 billion. So at the end of the day, guys, when the Fed is printing stimulus, when they're trying to help the normal person, All the money keeps going back to the top. That's why when the Fed printed money, the Gucci store was sold out with everything because everyone took their stimulus and they went to the fucking Gucci store. You can't even believe that shit, right? But that's what happened, right? I go to these designer stores like Louis Vuitton and Dior and they make me wait 20 minutes outside because there's so much demand because everyone has fucking money, right? So eventually all the dumbass motherfuckers are putting that money back to the people on top, right? So anyway, guys, point is, do not use leverage on your longer term positions. The way that I use leverage is to be in multiple positions at the same time, right? So I don't use it to go all in on one. I use it to be in multiple positions at the same time. That helps me, right? Well, what people on crypto is doing, some people are at 100 times fucking leverage. Stock or crypto goes up 1%, down 1%, their account is liquidated. So we've been seeing mass liquidations all across crypto because of the extreme amounts of leverage being used, okay? And there's no Fed to come in and save the fucking crypto market yet. But for the overall markets, guys, it all depends on the interest rates. The Fed could easily come out this week and say, you know what? Inflation's a lot crazier than we thought. We're going to raise the interest rates even faster. And if that happens, you think you saw a crash? You didn't see shit. Or they could come back and say, you know what? We got shit under control. Everything's back to normal. Market's going to fucking shoot up, right? Who knows? It's gambling at this point. It's gambling until the Fed decides what they're going to do. And these people are very smart, guys. To be the chairman of the Federal Reserve, you don't go to community college for that. You don't just fucking happen by accident. You got to grease the palms and you got to be in bed with the most powerful, the most rich people in the world. And if there's anything I know, the rich will continue to get fucking richer. And because the rich will continue to get richer, my bet long term is that I don't know, again, speculation, I think they're trying to fucking do another stimulus package, especially based on the presidency, based on the midterm elections. I think another stimulus package is not out of the fucking question, but then that's just fucking speculation. So again, guys, how to profit in this market, right? How to profit in this market. Well, if you want to just keep it very, very simple, if you have a heavily tech bias portfolio, let's say you own Amazon, Facebook, Tesla, Apple. Well, the way to protect yourself is you could have those longer term stocks and maybe short the indexes as a hedge, right? Short the indexes as a hedge. That way, if it goes down, you're fucking protected, right? You're fucking protected. The thing about the market is, guys, it's okay to hedge yourself and lose a little bit of money rather than blowing up your account, right? So as you can see, the market has been fucking tanking because all the people with big money are probably shorting the market to hedge themselves against their long positions, okay? So keep that in mind, guys. Right now, market's fucking crazy. Market's crazy. It's oversold. Yes, the market is oversold, but oversold doesn't mean anything if all of a sudden it costs you 10% to get a mortgage. Oversold doesn't mean fucking anything if all of a sudden it costs you 10% to get a car loan. Doesn't mean anything if it costs you fucking 15% to get a fucking building loan. America is built on debt. The less the interest rates are, the better it is for the world. The fucking problem is that the Fed printed so much fucking money that now everything is devalued, right? Everything has to come back to normal, right? So again, I'm not an economist. I'm not a genius. I'm just telling you what I've been seeing and what I've been observing from this entire world is, to be honest, guys, America is $30 trillion in debt. I read an article somewhere that said America is like the guy that's wearing all Gucci but has a ton of credit card bills, right? That's what America is. And one day, the world is going to wake up and say, hey, you got to fucking pay your credit card bill. And America doesn't have the money to pay off their credit card bill. So their solution is to keep printing money because no one wants the entire market to crash on their watch, right? There's midterm elections coming up. There's all these elections coming up. No one wants to go down in history as the chairman, the president, or whatever that crashed the market. They're going to keep pushing the fucking scam as long as they can until it fucking ends, right? So in my opinion, guys, I don't know what the Fed is going to do, but raising the interest rates, even the thought of it is pricing into the market right now. In reality, even if the Fed says they're raising interest rates, maybe the market has already priced it in that it doesn't matter anymore. But just keep that in mind, guys. Keep that in mind. The market will be irrational for a very long time, right? A very long time. So for me personally, when the markets are down 20%, I'm not looking to short these stocks anymore. I'm looking for dip buys on extremely broken down names. Obviously, that's not what I'm used to. Obviously, that's not what my expertise is in. But just based on the fact that there's probably more buyers in the world and more short sellers in the world, I think that when the market does turn, it's going to be a pretty big turn. And also, you got to remember, guys, that a lot of the sellers in this market are not, they're doing it against their will. The brokers margin calling them, the brokers liquidating them, the brokers fucking burning their accounts. So just keep that in mind. Ideally, we get some more small cap runners. Ideally, we get some more crazy stocks because those don't have to do anything with the market. But hey, guys, I mean, we're in a market cycle now where technically, it's kind of like a bear market, right? We're technically in a bear market. Stocks have tanked 50%. Indexes have tanked 20%. There's not as many runners, so technically we're pretty much in a bear market right now. And it's pretty interesting that the media isn't really covering it because I'm sure it's going to make the president look bad. But hey, guys, that's kind of where we're at now. And, you know, Bao has traded a bear market. Bao has traded this type of action. And keep in mind, guys, we make money based on speculation, right? So speculation money enters the small cap market. Speculation money enters all that shit. And if the overall markets are tanking and people aren't making money, if AMC is not going up, if GME is not going up, then speculation money is fucking dead. That means the small caps are dead. So yeah, guys, just wanted to kind of keep this video short and sweet. I want to remind you guys of our meetup on Saturday, 11 to 3. You must register at myinvestingclub.com/meetup. Keep in mind, anywhere in California requires a 48-hour COVID test or proof of vaccination. It's not our rules, it's California's rules. But we'll be in a wide open area. We'll have some fun. We're going to have some food. We're going to have a great time, guys. Very casual, very fun. And I will see you guys at the meetup. If you have any questions, let me know. And be sure to tune in to Bao's Instagram live tomorrow at 11 a.m. market time. So hopefully this video helps.